How are you today? Fantastico. Very nice. And how have your trades been? Everything been going well? I said in a webinar yesterday that I'm very thankful for the decent trading conditions we've had throughout the summer so far. And if you put it into contrast of what happened last year had the lowest volume and volatility in the history of Forex. And that's a long time. So we have a lot to be thankful for, in my opinion. It's really good to see that we have trading opportunities. How do you feel? Come on, Igor. Hello. Well, then how about good morning? How about that? Let's agree to that. Well, at least it's morning for me. It might be afternoon for you, but good day. Welcome to the webinar. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. It's an ECN that offers Forex traders the ability to trade currencies, but also energies, metals, stock indices, and binary options. I like binary options for scalping and for hedging riskier cash positions. So we do these webinars every single day, every Friday here at FX Street because they want you to be a successful currency trader. They want to invest into these webinars up front. And maybe one day when you feel comfortable as a trader and you're ready to trade real money, you'll choose TradersWay.com as your trading partner and as your prime broker. And together for many years of success, the partnership will grow. All right, so yes, lots going on. We'll go through the technicals. Lots going on the central bank side. We can talk about that. But I do have a personal goal for doing these webinars with you, and I'm hoping that we're moving closer and closer every week to achieving that goal. And that simple goal is that I want to know if these webinars held here at FX Street every single week are moving you closer and closer towards success as a foreign currency arbitrageur. And I would like to know if I've helped contribute to 1,000 additional pips to your success. So I'd like to know over the course of this year, these webinars equal 1,000 plus pips. Now, I've given you a lot of advice over the last few weeks, and I think most of it's been good, but you have to do the work. And so that's kind of where the relationship is. So how many people have focused on analyzing longer-term charts, like 4-hour and daily charts, making a technical or fundamental bias, printing out the chart, writing your bias on the chart with a felt tip marker, and then hanging those charts on the wall so that you can see? How many people have done that? 1, 2, 3, 4. All right, that's pretty typical, right? We have 52 people in the room, so about 90% of the people have not done it, which makes sense to me, right? It's about 92% of the people have not done it, which makes sense to me if you look at the statistics. That's about right. Yeah, there's the 5% that are, I would bet, would be a success down the road. So you're welcome to join the team anytime you want. But that was one of the things. Yes, cool. Well, congratulations. Is anyone going to do it now? Is anyone mad that they're part of the 90% that statistically lose? Nobody's upset about that? There's about 45 people that didn't respond? No? Really? I'd be mad. Oh, yeah, so Armin says, well, I'm not printing it. I'm taking a picture, well, and drawing on it. Well, all right, well, the reason I say print it is one of the important things is how your brain works. Your brain is a physical object, not just a metaphysical, right? It's not just your thoughts. It actually is physically there. And you can physically rewire your brain. It will actually change, and there's a lot of studies on this. So one of the reasons I say print it out is that that requires a different part of your brain that knows how to like go through the process of printing it out. And then you have this physical piece of paper now, which is tactile, and you can see it and you can feel it. And then you take the felt tip marker, and I say this for a particular reason, and I usually say a stinky felt tip marker, and then you draw maybe the pattern on the chart that you thought would make you bullish or bearish, and then you write on it, buy. And you're making all kinds of small mental commitments. Plus, the tactile part gets stored in your brain somewhere. The olfactory part, the smell of using the marker, that gets filed away somewhere in a different part of your brain. You see it, that goes to a different part of your brain. You remember the chart when it was on your computer before you printed it, that gets stored in a different way. And what happens is you're committing to your trading. There's an emotional side. You're doing things that you believe are going to work you towards the success you want to achieve as a trader, as well as committing to the actual trade itself. And it's very, very, very important. It's put it this way, it's similar to a routine. Okay? It's similar to having a routine. So one example is I used to have a member of FX Bootcamp, Kurt Worley, who's a fabulous person. He has a big brain for numbers, and he is a fan of golf. Well, he had the opportunity to caddy at a Pro-Am tournament near his home a few years ago, probably 8 or 9 years ago. And he caddied for the South African that wears black all the time. I never remember his name. One of the best golfers of all time. Gary Player, thank you. So Gary Player's out there. First of all, he's like 70 years old, but in between every hole, he gets down on the grass and does 10 push-ups, right? That was one thing. The other thing he said, Kurt noticed that one time he went to the bag. First of all, he stared down the fairway. Every hole, he would stare down the hole, down the fairway, and he would take note of where the sand traps are, where the rough is, what the angle he's going to want for his approach shot to the green. And he goes through the whole process, and then he commits in his mind to the shot that he wants to make. Then he turns, and he walks toward the bag, and he has to decide which club he wants. And if he wants to, sort of land, let's say land a little bit short of the fairway bunker, so he's going to use a 3-wood, not a driver. And so he goes to the 3-wood. Then he steps out and he, takes a couple of waggle practice swings, and then he looks back down the fairway again and recommits to the shot where he's going to hit toward the sand but lay it short, all that kind of stuff. And then he puts the ball down, then he re-looks at the target, then he squares up, he looks at the target again, a couple little practice wags, and he's getting ready now to do the swing, and a car horn nearby goes off. So he walks over, he puts the club back in the bag, and went through the entire routine again by standing in the center of the tee box, staring down the fairway, and he had to go through the whole thing again and recommit to everything. And I'm asking you to have a routine as well, because trading's very easy. You can just sit down, and I'm sure you're quick. You could probably be in 2 or 3 trades within 15 minutes, right? Just boom, 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 you found them. But you don't have a plan, you're not aiming, you're just winging it, right? Like an amateur golfing against Gary Player, who's going to crush you, statistically speaking. Okay? So that's all I'm asking you for on your path to greatness. Are you willing to make the unbelievable sacrifice of looking at a longer-term chart, printing it out, looking at it, writing down your technical or fundamental bias and committing to it? Oh, well, I don't want to waste a piece of paper. Well, you've made the decision. But I want you to succeed. That's my goal. But you're going to have to do it, okay? All right. So let's get going on technical analysis here. Let me have a sip of coffee. It's watered down. Gonna have to smack those minions around, huh? All right, so what do you want to talk about? So much going on. If you watch the video that I did on Monday, I went through all the commitment to traders report data, and then we went through the calendar for the week, and we recognized that there was a lot of central bank stuff on the calendar. And now we've gotten through that. And, you know, we've learned a lot, haven't we? Janet Yellen is committed now in congressional testimony to raising rates this year. So I'm thinking December. That's interesting. Bank of Canada cutting interest rates. And, you know, and why not? The only issue is I don't think it's really going to help that much because interest rates were not high to begin with. But, you know, as a central banker, I guess you're supposed to do something. So increasing the money supply is not a bad thing, but it's not going to fix commodity prices. But, you know, my mom's selling her house, so maybe lower interest rates get people to show up and, you know, start a bidding war. Mark asks a question. What makes the difference between a successful trader and a struggling one? Assuming that you know the basics of technical and fundamental analysis and all that kind of stuff. Yeah, I kind of covered that topic 2 or 3 different times over the course of the last few months. And I believe it's ridiculous, sickening work ethic. Because without that, you know, Lawrence's money management, yes, if you have ridiculous, sickening work ethic. Or money management is a big thing. Or risk management is really what I think it is. The money management should be fairly easy, but, you know, risk and money management, pretty much the same thing. But most traders are unwilling or incapable of doing the work. And I don't mean to be mean about it. I'm certainly not sarcastic about it. But most people want to get rich the easy way. And that means skipping the work. Have you ever met a self-made millionaire? Self-made, not daddy's money, not grandpa's daddy. They're probably a small business owner, and I bet you they have sickening work ethic. Ridiculous, sickening work ethic. So that's all I'm saying. Like, you know how there's an old saying, 80% of it is showing up? No, 80% of it is not sucking. And the other 20% is awesomeness. That's the title of my next book. Yeah. So, you know, and I can say that, you know, we now have 67 people in the room. I've met a lot of you, you know, online, and some in person, I'm sure. But most people here, I think, are level-headed, are sound-minded, have reasonable skills. And so I think to some level, you know, you must agree that there is something that separates the mediocre from you know, the Illuminati, because we know in Forex it's a zero-sum game. A lot of people lose and a few people make a lot of money. And I bet you in this room, out of the 67 people that are here, a big chunk of you guys, an unusual percentage, are the people that are working really, really hard and are very much focused on their success. Whether you carry out my advice is again, probably a statistical thing where, 90% of the 30% are still going to ignore it. But I honestly believe these things add up. Okay. All right. So let's continue. So one of the things that we've learned this week is the U.S. dollar is likely to be strong for quite some time. I mean, years. Okay, and we've been on this path ever since the taper tantrum, right? Cool. We had sort of a pullback for a while we figured out the Greece issue, the Greek issue. And let's get off the Aussie for a second. Let's go to the euro. And we had some nice pullbacks, and this is during the speeches I was giving, right? Over and over and over again, I asked you, has anything fundamentally changed? And we discussed over and over and over, no. Somewhere along the line, the trend should continue. Now, when? I don't know. But that's why I would ask you, like technically or fundamentally speaking on a longer term chart, has anything changed during, this period here, or even this period here, right? Has anything changed? Do you stop being a bear? Same thing in this period, right? Well, the first one was pretty easy because you got this big drop, fine. Retracement, fine. Lower low, fine. What do you do once it's made a lower low? What's the key word? What's the secret word? Hammock. Yeah, thank you. Joseph even spells it right. Wow. So you do that, right? Which is your future sell zone. And it did that, but then we break out of the zone, don't we? So we're up here, in which you yell hammock again, and now you got this version, but now it fails to make a higher high. So you consolidate, right? Right? You following me now? Downtrend, consolidation. Okay. And I would assume it'll continue down, but I've learned a long time ago, the definition of assume. So what you're supposed to do with technical analysis is not assume anything and just do what the analysis suggests. And this suggests we stay range bound. I will become a full bear again if it makes a lower low, and then we'll go for the lower high. So at this point, what we're doing in the process is just shorting off the top. But this whole, week, the focus is down to the next level of support again, in which it may just head back up. Now, we're hoping that doesn't happen. Central banking-wise, we could talk about the ECB continuing quantitative easing, right? And the Fed raising interest rates. One would assume under these fundamental conditions, and again, I don't like to assume, but the textbook would say that this mission that we had before will continue. But you may recall in May or June, we also talked about that, right? Down, sideways all summer, and then continuation. Now, one of the things I think that could bring us back up into the range, so let's talk about that. Why would we stay in the range and not continue lower? Why would we come down like this and then head back up? Think of the market conditions that would create such a move. No, well, you know, we're looking into the future, right? It's the middle of July. What's the next thing, right? Let's think about it. What's the next risk event that would be a risk to the downtrend in the Euro USD? Greece is off, forget that. Right? Sort of like an ingrown toenail. You want it fixed, you got to rip it out. Okay, a rate hike in September, but would that diminish the downtrend? So what condition would create, you know, moderate dollar weakness for a reasonable amount of time? Softer data leading into no rate hike in September. Thank you. We pull back, try again later. Okay? You know what I would like in September? And you'll hear this from me first. I don't think you'll hear this anywhere else on FX Street. I think on September, the Fed doesn't increase the Fed funds rate. Fed funds rate. That stays the same. And they raise, okay, so I'll say flat FFR, but they'll raise the discount window. You know what? Maybe I'll take that back. See, the discount window does need to be raised, but there's too much excess reserves held by member banks, right? Do you guys know the issue I'm thinking now that I'm talking out loud? The discount window is used to influence how many excess reserves, if any, member banks hold. And right now, let me draw something. Normally, the reserve requirement ratio in the United States is 10%. So let's say of all deposits, how do we draw this? Let's say all deposits in the banking system, the banks are holding this much money at the Fed. And traditionally, so this is deposits. Oops, that's a D. These are reserves held at the Fed. And then traditionally, you have excess reserves of this, and that's E, right? Okay, that's the fractional reserve banking system. So that's what you would have seen over the last 25 years. That's the model that you would see. Total deposits, reserves, required reserves, excess reserves, okay? Do you know how many reserves we have now? Or, sorry, excess reserves? It's like this. Yeah, that money the Fed's been printing hasn't been put into the economy yet. It's just sitting in the banking system. So if this is traditionally used to influence banks to hold more, because the more they hold, the less risk to the banking system there is. So if they weren't holding enough, if they had almost zero, they would jack up the discount window well above the Fed funds rate, maybe 1.25, 1.5. But right now, the spread between the Fed funds rate and the discount window, the discount rate, I should say, discount rate for the discount window, the spread between the FFR and the DR is historically narrow. But so I'm going to get rid of that. They're going to have to change that soon, or sometime. But thinking about it now, I think this is a bigger problem. Imagine the economy, how quickly it'll suddenly grow. Okay, so you know what? Maybe this is going to be the best thing ever. How about this? Let's talk about this out loud. The Fed raises the Fed funds rate, which raises the prime rate, which raises interest rates on commercial loans and real estate loans, which means banks can make money on this because instead of picking up minimal, they'll pick up, let's say, normal levels of return on the risk they take by loaning it out. So maybe the increase in interest rates gets the money into the system, which gets put into deposits and multiplied over and over through the fractional reserve banking system. So maybe interest rates are going to be the best thing ever to happen to the United States of America in a very long time. And it'll be counterintuitive to the experts you hear on TV because they'll come out and tell you raising interest rates will kill the economy. What I'm just sharing out loud now that we think about it, raising interest rates will probably spur the economy more than any sort of stimulus package the government's created because there's already probably $100 billion, maybe $500 billion in excess reserves sitting in the commercial banks, but not invested into the economy. Cool. Well, okay, so like the question is, why didn't the banks do it before? Well, they wouldn't have made much money. No, Mark, I don't think we're talking about 0.25%. Well, so there's a couple of things. There's the Fed, let's say, suddenly raises 0.25%. And you're like, what's the big deal? Well, it's the perceived trend. That's the big deal. So let's say they do, by the end of next year, let's say we're at least at 1%. 1% for the, that's 1.0% Fed funds rate. Maybe I'll do it that way. Fed funds rate. So what's the prime rate? Well, how about this? Fed funds rate goes to 1.0. 10-year T-note goes to 3.0. Prime rate goes to what? The prime rate, I'll do it like that, P sub R. Prime rate goes to 4.0. Commercial, let's say mortgages, mort, goes to 5.0. And now banks are making 5%, but borrowing at 1%. And the spread between the two is good, and they're making money. And of course, over time, it continues to go up because it can't be at 1% forever. Okay. Well, Mark asks another fundamental question. Do you remember when QE ended and everyone thought the market was going down? Well, it did actually. If you look at what happened between QE1 and QE2, the market did crash, and QE2 did nothing. QE1 spurred the economy. We picked the bottom. Faux show. Okay? That stopped the market crash. Then we stopped, and people were not sure. And if you go back, I remember, if you go back, the S&P 500 did a 3A2 Fibonacci retracement off of the bottom move. And I think the second re-entry was 8,000. And then QE2 didn't really do anything. It wasn't big enough. So then QE3 came in at a magnitude bigger, and boom. So that's why they were worried that the end of the market was the end of QE. But let me tell you, free money rallies are really a good thing. I mean, it worked. It helped. Okay. I mean, who do you think had a bigger impact on the financial crisis in the U.S. economy? Was it Ben Bernanke or President Obama? Who had a larger impact on the outcome of the financial crisis? How about Geithner? Still mad at him. Amazing. So anyways, here's the trend that we've been following on the Euro USD forever. So pretty interesting stuff. Let's talk about it very briefly, and we'll move on .com. Lower low. Okay, two things. You move the old support, it should become future resistance, and then you measure with a Fibonacci retracement somewhere between the 382 and 618. This was a 50%, right? Then what? How do you want to measure this one? Off of here or here? I'll do it here. See, this one's tricky because it's that gap, right? Filled the gap. So let's mark it here then if that's the gap. Okay. Makes a lower low. So now we got to kind of go here, right? So somewhere in the future, you might see me do this. What do you think? Could be a rabbit, could be. Well, if it does that, I'll keep that in mind, right? That's called a trade plan. Do you think this area here could be important? But hopefully what we get is an up to the 21 and down, and then up and then down. Okay, that kind of thing. Okay, let's pick another one. How about Canada? We've learned that they've cut interest rates. Okay. Did you guys trade it? I've spent a significant amount of time recently teaching people how to swing trade. There's a video on YouTube called How to Swing Trade. Very, very easy strategy. For example, you measure yesterday's low, yesterday's high. You look at yesterday's close, just like you're calculating a pivot point. And your intent is to buy in the direction of the prevailing trend, somewhere between the 382 and 618 Fibonacci retracement. Like I said, when you're eyeballing yesterday's price action, you're actually looking at you're basically calculating a central pivot point with your brain. Okay, you should also take psych levels into play. I'd also consider pivot point, other pivots, psych levels, whatever. Long story short, you know, when you do time of day analysis, like the London Open, you throw in psych levels, pivot points, and fib levels, which to me, even though they're not the same, they're not exactly the same. To me, all of this is all reasonable. It's all kind of the same thing. If you're saying 50 and I'm looking at 44, look, 50's fine by me, man. It's a zone. Jazz, just go to youtube.com/c/tradersway. Do a search for swing trade. There's probably 2 videos going over this. But anyways, the long is here. And the interesting thing about this is the entry, the predicted entry when discussing this is the London Open. This is when you most ideal time to be looking for this. Okay? So here's yesterday's price action. This is called the Asia fade. And you long bomb it on the London Open, ideally somewhere around the 382 and 618 Fibonacci retracement. Yeah, Igor, I think you did that. You've said this before, and you must be doing something way wrong, man. I think someone else said that, like, I made 6 trades and I did them all wrong. Well, one thing you could do is make 6 trades in one day and simply get the direction of the market wrong. Okay? Now, well, all you're doing is the same mistake 6 times. Well, why don't you make 19 trades in the wrong direction? You'll make 19 wrong. So, like, one rule of engagement I have is I make the first trade first. Okay? And when I get that stop jammed at break even, right? So let's say I'm in here now and I jam my stop at BE, I go find the second trade. And then the third trade, once that one's at break even. Then the fourth trade, when that one's break even. Okay? Well, I know you're not complaining, but, you know, I'm helping you, right? So that's the way I do it. I build positions. I don't, you know, because I think what you're doing, Igor, because you mentioned it before, I think you're throwing down limit orders. Right? Boom, 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 and they'll walk away. Yeah, okay. But, like, look, you see this move? Okay? I don't know how you could get the direction wrong. See, I'm incapable of selling this. And you'll hear me a lot. I'm very definitive. I'm like, it's impossible for me to sell that. Okay? That's it. So I think that way. Okay? It's impossible for me to sell this. So I can only buy it. So in the analysis, where are the best buy zones? Right? That's the thought process that I'm reviewing, right? Psych level? Yup. Central pivot point? Yup. 382? Yup. Also, after a big move that's fundamentally based, this is all at once what you're seeing here is the Fed raising interest rates. All in the same day, guys. In Canada, lowering interest rates. A divergence in central banking policy, which increases the value of the dollar, decreases the value of the Canadian dollar. This is fundamentally driven. So do you think it's going to come back 618? What do you think, guys? Just logically, do you think there's going to be a fundamental move and then it makes a 618 technical move? And the reason for it is it's not a technical trade. Now, at the end of the day, this is people taking a breather. But what do you think the London boys are going to do the next day after they see it's retraced almost 40%? They're going to do it again. Right? Stop thinking about your charts as pure just colors and rules. No, you know what it is? It's people. There's people on the other side of your trade. People. What would a London trader think? Sits down at his desk early in the morning, in case this is like 10 o'clock in the morning, and he sees this. Look at this, guys. Look at that. Right off, exactly off the daily central pivot point. Exactly. Not one pip lower. Not one pip lower. In the direction of the prevailing trend. You think that's a coincidence? But you know, how do you calculate a central pivot point? You add the low, the high, and the closing numbers, and then divide by 3, which is essentially what I'm telling you to do, eyeballing it, right? And I have it marked. This is the 382 Fibonacci retracement. This is the 50%, you know, down to the 50%. This is the 618. So I can see it just by eyeballing it. And you're saying, well, Wayne, you know, it's like 3 pips farther down. It didn't touch it, Wayne. It had 3 more pips to go. You're like, yeah, you're right, dude. No, I'm just bugging you. And I'm not specifically picking on you, Igor. I'm trying to drill home the logic. Yesterday, it was sunny. Today is is reasonably likely to be reasonably sunny again. Simplify, 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 simplify. One of the messages I've been giving over the last few weeks is that while you're booting up your computer, you should already know the trades that you want to be in. If you don't know, you're doing something wrong. Will you please hear that and remember that, please? When you're booting up your computer in the morning, you're getting your cup of coffee going and all that kind of stuff, you should already know the trade that you're going to be in. The only question is whether you get the opportunity to trade it or not. If you don't already know, then you're not on a path to success. Yeah, 2 o'clock in the morning, you should already know. Why? You've printed out your charts, guys. You made a decision technically and fundamentally on long-term technical charts or fundamentals. They don't change that often. So your computer's booting up and you're standing there sipping on your cup of coffee, reviewing your bias. You're reviewing the charts you've pasted to your wall. You've pinned to your wall. Get a magnetic whiteboard. So you got magnets there, but you're reviewing your charts and you're like, yep, I'm going to, you know, if the dollar's weak today, I'm going to buy the pound dollar. If the dollar's strong today, I'm going to sell the euro dollar. I hope that USD yen goes up. If it's a commodity day and you're going through your mind and you're like, yep, I'm ready to go. Just like Gary Player staring down down the course. You're just sitting there waiting for your computers to boot up, and then you sit down and say, all right, how close to support are we? Because I want to buy this. Do you hear me? Does that sound like bad advice? You're like, this guy is an idiot. What an idiot. Only a loser would have a technical or fundamental bias. A professional trader certainly wouldn't have a technical or fundamental bias. We all know professional traders just sit down and wing it, and chase price all day. So I want you to envision you're standing there early in the morning. You've hit the start button on your computer. You're sipping a cup of coffee. You're standing. You're not even sitting at your chair. And you're standing next to your whiteboard or your bulletin board or the pins to your wall, whatever, and you have 6 charts, your 6 favorite currency pairs. You don't need more than that. And you're sitting there as it's booting. You're sipping your coffee, standing there, and you're looking at your charts, and you're realigning your satellites. And you say to yourself, oh, this USD yen. I hope I can catch it near a psych level today. I hope it's been falling because I'd love to sit down and see that we're near support. I'd love it. You're like, oh, yeah. Okay. And then your charts start up, and then you sit down and you're like, okay, where's that USD yen? Are we near support? Oh, we're not? Oh, well, all right, well, maybe in New York. Okay? You follow me? Do you think that's closer to what a professional trader is like? How about this? Let's paint another picture in your brain, because this is all part of neuro-linguistic programming. So envision this, if you will. We work together. There's a team of us, let's say maybe 10 traders, and I'm the senior trader. And we sit down in the morning, every single morning, with our cup of coffee. I have bagels brought in every day and fabulous coffee. And it's early in the morning, so the market isn't fired up yet. And we sit down and we discuss our trade plans for the day. And at the whiteboard behind me, where we meet, everyone else is sitting around the conference table. And behind me is a whiteboard, and we've written our fundamental bias for all the major currency pairs and why underneath. Just tiny little bullet points, but every single day we revisit this when I just read it out loud. Bullish US dollar, Yellen's going to raise interest rates in December. Bearish Canadian dollar, Bank of Canada has cut interest rates. So on and so forth. And we go through this. Japanese yen, bearish. The Bank of Japan readjusted their expected target, or their expected inflation level of 1.7. So they're missing their 2.0 target. Great. Next. We go through all of this, and then we go around the table and we say, Igor, go ahead and cover the Kiwi. You're like, all right, well, we're going to do Kiwi dollar, Kiwi yen. Boom. Next. Right? Adam, go through the euro, please. Next. And we discuss these trades. And then you go to your computer, right? Lox and egg salad. Oy vey. But the thing is, we do it every day. So now change the image in your brain. You're standing next to your bulletin board in your home office, sipping a cup of coffee while your Windows PC boots up. And you run through the major currency pairs. based on your long-term technical or fundamental bias. Okay? It's a start. So if you wanted to buy this currency pair, I don't see why you couldn't have bought this at the London Open. I honestly don't. If it was impossible for you to sell this, and you're sitting there at your computer at prime time, and it reverses off the central pivot point 3 pips off the 3A2, I mean, honestly, I just don't understand why you wouldn't be on it. It's just like, I don't know, maybe you weren't there, which is fine. You just weren't at your computer, so on and so forth. You're like, I didn't trade today. But if you were my USD CAD trader, and you were my expert on USD CAD, and it was impossible for you to sell it, then you're sitting at your computer for, I don't know, 9 hours a day, and the only thing you can do is buy it, and you didn't buy that. Like, what is it that you do? Right? Boil it down to very, very simple things. Make the commitments. That's all I'm asking for. Print out your USD CAD, commit to it, and say, buy, and maybe even a bullet point underneath, right? US, and then you go percent up for interest rates going up, CAD, percent down. And that's on your wall. That's it. All you can do. And every single day, you're looking for a retracement to support to buy, right? That's it. That's your entire existence. Then that, to me, my friend, is very catchable. Now you might say, well, Wayne, I look at 97 different pairs. I want to trade the Kiwi Swissy. So I was doing my analysis on my Kiwi Swissy and I missed that one. Maybe you need to simplify your life. Well, so let's talk about prioritization. What occurred this week? Okay, let's talk about it. Japan is missing their target. Their stated goal is 2%. They just admitted this week in writing that they're only going to get to 1.7 at best. So you tell me, over the next 3 or 4 months, should we be buying the Japanese yen or selling the Japanese yen? Based on that knowledge. One would assume if they're not going to hit their target that they're going to at least have to continue with quantitative easing, maybe even add to the quantitative easing. That would be bearish. So I would do something like that. I'm a bear in the Japanese yen. Done. Done. I'm done. Can you do that for just the majors, guys? Go through the pound, the euro, the Swiss franc, right? The dollar, the Aussie, the CAD, the Kiwi, the yen, just that. Well, see, that's it. So how about this? Are you a bull on the euro? Are you a bull on the yen? Then why the hell would you be, right? If you're bear on both, you get it? If you're a bear on both, then stop trading that currency pair. Just stop it. Just stop it. Stop it. Put it down. Don't touch it. Put that back. Sound like you're dead. Dad, will you buy Dad, will you buy the euro yen for me, please? Dad, come on, please buy me the euro yen, Dad, please. Shut up! Put that down. Don't even touch it. No. Shut your mouth. When I was your age, I never had no euro yen. Didn't even exist yet. Oh, come on. Come on, dude. It's on sale. Right? So, no. Stop it. So don't even do it anymore. This is why I said line them up. Go through all your majors. Are you a bull or are you a bear? Are you a bull or are you a bear? Are you a bull or are you a bear? And then put them in order. How about that? We'll take it even farther. Put it in order. Which ones are you most bullish on? Let's say US dollar. Which ones are you most bearish on? I don't know, Swiss franc or something, right? And then fill them in between in order. Just put them in order of bullishness to bearishness. And then start pairing them up properly. That's why in the morning you should be sitting there like, I want to buy USD CAD. I want to buy USD CAD. I want to buy USD CAD. I want to buy USD. Come on, USD CAD. Come on, Bubba. Come on down so I can buy you. Honestly, you should be able to do that. That's how I think anyways. I mean, you should be eager to buy this. There's no reason, none. There is no reason in the entire world to sell this. There isn't. There just absolutely is. And so you need to have that clarity. And what's the best time of day to trade? London Open, which is right there. That's why I mark it. Right? You can see it, right? I have it marked. This is the whole London morning. Oops, right here. This is the whole, London Open to London lunch. Fu asks, what about on news days? If you can jam your stop at break even before the news, get her done. Because you'll find out a lot of the time the news magically works in your favor. As long as you can jam your stop, I don't care. Hero or zero. Okay, Fu? Yeah.
CPI 0.3% is in line with expectation. Core at 0.2%, also in line year over year, in line at 0.1% and 1.8%. Housing starts 1.17 million above the 1.11 million expected. Prior revised to 1.07 million from 1.04 million. Starts permits at 1.34 million, well above the 1.15 million expected for building permits.
All right. Housing starts, really good numbers. Canada and the United States, CPI as expected. Boo, 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 boo. Wow, look at that reaction, huh? What's interesting is that the dollar's actually strong. Very interesting. Let's go to a different setup here. Well, no, let's just go to a different currency. Yeah, good move here for the buck. This is people saying, oh, well, Janet Yellen has to raise interest rates now in September, which of course is nonsense, but that's what people are playing. It's one of these things where it's Friday and we're already hitting our target, so there's not much more to do here. So you notice the weekly pivot points. This is the weekly low, occurred on Monday morning. Weekly M2, what's the target based on pivot points? No, M4. Straight out of my book, I wrote 7 years ago. M2 bottom predicts M4 top, right there. That's the predicted move. Oops, conservative range. The aggressive range would be here to the R2. That's the aggressive target on Monday, assuming that bottom. And M4 is the conservative target. So I mark this target zone. I call it a pivot profit zone. Profit meaning you need to get out here. There's the conservative. There's the aggressive. There's the identified range. Seems pretty textbook to me. Notice how it made a higher high, higher low, and then kicked off the weekly central pivot point. How nice is that? Went up, consolidated around the conservative target. Look at how many times we got within that zone. Now we're up in here. I believe this is something, but anyways. So just straightforward pivot point theory. Are you a bull on this Swiss franc? Okay. So it's just like, once again, if the only thing you could possibly do, because you already made a decision, listen to me. If you already made a decision because you print out your long-term charts and you made a technical decision or you made a fundamental decision, right, you should have a predefined direction on this currency pair, and you can only trade that. You understand? If you're a bull, you can only buy dips. That's it. So, you know, look at all the different trading opportunities if you had gone and done that work. Double bottom, okay? M2 predicts a top of M4, which we hit twice, and even topped out the third time. Look at that. Just beautiful, right off the M2. Okay? Came down, where? M2, topped out at the M4. Once again, perfect. Came down, M2, and M2, and up here again. So if you could only buy it, isn't it reasonable to think that this pattern is achievable? It's reasonable, right? What's usually missing is that you haven't made the decision beforehand. And you get there and you're like, well, it might come down, or, oh, well, it might do this. There's no might. You have to remove that word from your vernacular. It's just, if you're a bull, it's only going to go up. Unless it reverses, of course, and then you stop being a bull. But you already analyzed this technically and fundamentally. So it's going to make higher lows and higher highs. That's what your analysis told you. That's it. There's no, it might do this or might do that. No. If you've decided to be a bull, it's going up. It's going to make a higher high. You're going to buy the role reversal. As soon as it makes a higher high, you do stuff like this. All right, if it comes back here, I'm going to buy it. It's not hard. Right? If you do it correctly, it's not that difficult. You've already decided the direction. You already know basically the price. You just don't know when it's going to be entered. Okay? Is anybody having an aha moment? There's now 94 people. And I don't know if you've heard this from others. I don't know if you've heard this from me. I don't know if this is old hat. I don't know if this is the greatest thing you've ever seen. You're like, holy moly. It just dawned on me. Any feedback? Any feedback? There's about 15 people that type in answers. How about the other 80 people? Could I please have some feedback? Thank you. Good. Thank you. Lots of people already learned this from me. Well, that makes me happy. Well, who taught Pegler? He's a great guy, man. One of the best people in the whole planet. I think Helene went back to like a regular day job. So I think he started his own thing and it didn't work out that well. But, you know, it's a tough gig. Yeah. Oh, just old people from the past. But, okay, good, guys. I always lose track. How much more time do I have? I only have 7 minutes left. Okay. I only have 7 minutes left. What would you like me to cover? How can I help? Your time's important to me, and I want to give you 100%. Oil. All right. I don't get questions about oil that much. Sure. Sure. Okay, this is what I predicted 6 months ago. Well, here's April. So in, I guess, early March, we had this moving up. And then I actually, to be honest with you, I had a sell here because of this resistance. I mean, why wouldn't I? But we had it going up off the bottom, up into here, and then sell it. But you notice it started going up in like, I don't know, mid-March. And by like the first or second week of April, we were preparing to sell. And I think I actually had a short trade here. So it was up for 3 weeks, and then we thought it would come down to the range. And again, it's not me. It's just that's the technical analysis, right? So that's the first part. Off the triple bottom, we were long for about 3 weeks. And we had two scenarios. One, it breaks down off of old resistance. Or two, as you can see, I already have it drawn, it breaks out. Okay? So it broke out. So we were long here. You know, middle of April. Now, the idea then was it was going to come all the way up and hit this 382 Fibonacci retracement, which I drew back in 2014. We had drawn this basically in December. I had measured this move, which is the beginning of the big crash. And we had already been eyeballing this all year. And this was part of the analysis that it would eventually come up and touch the 382 Fibonacci retracement of the drop. Okay, so then in May, which we weren't even there yet, we had already drawn the pattern that this would work its way up to the 382 and then give a reversal pattern in which we would come down. We've been watching this every single day since about May, waiting for it to reverse. And now it has fulfilled its destiny according to technical analysis. And we've gotten it to break down, and we're now approaching the 618 Fibonacci retracement. Okay? And the message here is you're getting the analysis 3 or 4 or 5 weeks in advance with clear technical and fundamental explanations why. Is there anybody here that can confirm that we were setting this up weeks in advance for such price action? Trade it up, if it breaks, catch the pullback, trade it up to the 382, then look for reversal patterns, and we bring it back down. So 1, 2, 3, 4, 5 people have confirmed that. 6, 7, yeah. So sometimes I'm talking about what happened yesterday. Sometimes I'm talking about what's about to happen right this second. Sometimes I'm talking about what's likely to happen throughout the rest of the trading day and into tomorrow. So very often I'll go through and we'll do Stokes cycles, you know, like this. Then sometimes it's weekly or even monthly outlooks. And so oil's coming down as predicted. The 618 could be important, although to me it seems to be more of a 786 move. But I have to be honest with you, you know, the 50 mark is right here. So the general idea is I don't think this is going to go to 40. Okay? I don't think it's going to go to 40. So generally speaking, you know, it could do this for a very long time. Okay, I don't think it's worth 70. I don't think it's worth 30. So where's the sort of the range? Okay. So I'm thinking that even aggressively, you know, this is going to be our range for oil in a while. And, you know, we got a ways down. Now, if we bounce at the 50 mark because of the psych level, then that's what we're going to do is probably 50 to 60 for 50-ish to 60-ish for, you know, I don't know, even years. Okay. Now remember, there's the technical analysis of this, and then there's the fundamentals. And I don't think it's a technical play anymore. I don't think there are any technicals left. So it comes down to fundamentals. The issue is demand, and the issue is supply. I think demand will increase over the next 3 years as quantitative easing kicks in Europe, which would then increase industrial production in China, which would then prop up commodity prices. But I also believe that we're in a technological revolution in which when demand does increase, we can easily add to supply. So I think you'll get a demand move, you'll get a supply increase, a demand move, and a supply increase. Yes, Ron discusses, you know, with the deal with Iran. Well, that, you know, has that been priced in? Well, it has been or is being. Okay. But so, you know, does it bounce at 50? I don't know. It's a nice big psychological level. Is this going to be support? Yeah, that has a high reasonable chance of being support. But I don't see oil going down to 30. So it's just my guess here. And I don't think it's worth 70. Because if demand increases so much so quickly that we get up to near 70, the frackers are just going to add to supply and bring it right back down. So the market's going to be incredibly stable where we're, you know, at an equilibrium point. Like, do it this way, right? Supply curve, you know, demand curve. We're going to be at this equilibrium point, you know, of, let's say, $55 a barrel for a very long time. And if demand goes up, they'll just increase supply and so on and so forth. And it just we just kind of, maybe above 50, but below 70, right? Okay. And I believe that's been our 75 minutes. It's a Friday. I want to be cognitive of FX Street's time. So thank you, everyone, for your loyalty. I hope I do contribute to your future greatness, or if you're great now, that somehow in a small way that I help contribute to that as well. I don't have anything to sell you. I don't have a service. I don't have a book. I don't have a DVD. I don't have a training course to sell you. So I would like to win Forex Person of the Year from FX Street because I've been working with them for 10 years now. That's about it. So really, my dream is for you to succeed, and that maybe one day we meet up and we have a cocktail or a cigar, maybe a steak dinner, and we reminisce about the good old times. That's what's in it for me.